Good afternoon, everyone. My name is Mohammed Ibrahim. I'm the co-founder and CEO of DeFa.
Chief Mate of DeFa by Invoice Mate, Mohammed Salman Anjum. Good day, everyone.
So DeFa is a decentralized factoring protocol by InvoiceMate, which recently got recognized by Deloitte as the Rising Star winner.
Invoices. 4 years back, when I visualized this project, the intention was to connect the two dots, the two worlds. One off-chain world, businesses, and then on-chain world, which is the Web3. And no better than invoices, because they are the world's most commonly used commercial documents. This is the vehicle, this is the bridge that can connect the two dots. Now, this is the world that is creating an opportunity of $3.6 trillion worth global invoice factoring market as of today, and in future, it will be a $6 trillion worth market by 2032. So, this real-world revenue needs to meet with the DeFi investors or protocols, and that's what exactly we are doing with the DeFa as DeFi primitive moving forward.
Well, why are we doing this? Traditional DeFi protocols rely on speculative assets for their dual asset liquidity pools. For example, using Bitcoin, Ethereum, or volatile assets as collateral for lending and borrowing. Now, this results to huge losses and low APYs during high volatile market conditions, which is all the time in crypto, right? Just since March 2024, DeFi protocols have lost more than $22.8 billion worth of TVL due to high volatility. With DeFa, we aim to change that. We want to offer risk-adjusted APY from real-world economic activity from traditional businesses seeking short-term loans, so providing stable and secure yields even during the bear market. With DeFa, real-world businesses get access to alternative credit from stablecoin investors. And on the other end, our single asset liquidity pools offer DeFi investors with a chance to get up to 26% APY derived from real economic activity.
Yeah, you heard it right. It's bear market resistant product for the DeFi investors. This is the best USP of this project.
Yes. So with us, our settlement times are shorter than annual APY. So we like to call it QPY, quarterly percentage yield, because invoices are generally settled in a 90-day time frame. Well, what's the secret sauce? How are we ensuring that these businesses that we are onboarding are secure, legit, and offering that APY? We like to call it Know Your Invoice consensus mechanism. It's the world's first immutable and automated credit scoring mechanism, which not only verifies the invoice, but also verifies the borrower itself. So our in-house built LLM processes more than 300,000 invoices, tax statements, bank statements, and other comprehensive documents to provide a credit score for this for the SME.
And just 2 days back, there was an article by Cointelegraph addressing the same issue, that RWA market has the biggest challenge around the verification of these authenticity of these RWAs. This is exactly what we are doing with the most liquid, the most accessible RWA, which is invoice, which is also having a prone to the frauds. So we are digitally the first ever invoice verification tool, using both blockchain and AI.
Yeah, so our AI bot basically verifies 30 plus checkpoints, which is then stored on chain to ensure diligent lending decision by the lenders. How the process works: so essentially, a business raises an invoice through our platform. This invoice gets verified through Know Your Invoice. It gets tokenized into a liquidity pool, which is then accessible by retail investors, of DeFi investors, and also institutional investors to earn up to 26% APY from our liquidity pools. As a result, we won the Best Blockchain Startup Award by GB Tech Awards for this technology, and also as the Best Invoice Financing Solution of 2024. Let's talk numbers now.
So we have, in last 1.5 years, have done more than 225 million total revenue coming from 2 recurring revenue streams. So we have the product market fit, and by the end of this year, we'll be closing the year with the ARR of 250. So around 25 to 30K MRR coming quarter as well. About other things, yes, we have signed $400 million recurring factoring contract. We have 10 plus onboarded institutions, including the government entities like Ministry of HR here. And then, of course, the most important part is the liquidity. So we have ensured liquidity from 10 plus liquidity providers to bridge the liquidity gap from both Web2 and Web3 investors. So that enabled us doing the factoring of $50 million more, and we have tokenized our processed over $275 million worth invoices from 2,000 plus businesses, and around 200,000 invoices are posted on a ledger. This is the best part, zero bad debt. That validates our KYI technology. That is the verification built for the trusted deal flows for the DeFi investors.
So all of these amazing numbers wouldn't have been possible without the amazing team behind it. I come from the DeFi degen background, bringing in that DeFi expertise. He can give an introduction.
So TradeFi, I'm ex-PwC, in fact, still working as a consultant for them, working for the UAE Central Bank as well. Again, breathing blockchain for 8 years with the vision that it should be going for the mass adoption.
So we're building the perfect between TradFi and DeFi, and we are backed by some of the leading venture capitalists and venture builders like IOTA Foundation, Black Alpha Capital, some leading family offices out of the UAE, and also Crypto Oasis and TDFi. Well, this is our ecosystem of partners and advisors. We are backed by Paul Taylor as well, who is ex-BlackRock, helping us develop our tokenization strategy. We have some key partners like,
So simply, it's an ecosystem game. Any B2B business can't be built with only one team. It has to be surrounded with the equally valuable partners like OTC partners, so we can seamlessly onboard the borrowers, and they need not stable coins. They need to pay utility bills and salaries in the form of fiat. So seamlessly, we have connected with OTC partners. We have infrastructure partners, so that there is a smooth journey for our clients onboarding with the on-chain world without any with full convenience.
Let's talk about token. Well, we are now launching our ecosystem-wide utility token to amplify reward payouts. 4 core utilities on the top of my head. Basically, we have lending rewards for LPs that are basically incentivization rewards for LPs that are deploying liquidity in our liquidity pools. Secondly, we have borrow rebates. SMEs that are interacting with the platform, doing timely repayments. We have an incentivization mechanism for that as well. The more tokens the lenders and SMEs hold of our platform, the more benefits they get in terms of their loans. And thirdly, the most important one, we have an LP shield. It's like an insurance pool that is a part of our allocation of the token to protect any investors from potential bad debts that might occur in the future. Last but not the least, we have a strategy-specific fees for all the builders on our protocol that wants to develop specialized strategies. Now, after successfully closing our oversubscribed seed round with the participations like Black Alpha Capital, IOTA Foundation, and so on and so forth, we are now raising a 3.5 million strategic round at a 30 million valuation, equity and token warrants. We're flexible. We have already commitments from Evo Invest and secured some other soft commitments as well.
So we are truly enabler of financial inclusion, connecting the two worlds of DeFi and, of course, the CeFi. So happy to onboard all